Good morning and welcome to AGORACOM News TV. It's Thursday, August the 1st, 2013. As you know, this show is designed to, what I do is I go through a bunch of news releases, try to find the best new press releases that I can find on a daily basis, Monday through Thursday. The real goal is to try and help our audience to find good companies to do the research on, and ultimately to find some good investments and companies that outperform. On today's show, I've got three companies to talk about. I'm Alan Barry Labucan. I'm the host of the show and also the chief market commentator for AGORACOM. We'll get right to those news press releases. The first company I'm going to talk about today is Virtutone. Virtutone Networks. They are an AGORACOM sponsor. So I want to let you know that. Virtutone Networks had news out that their wholesale division generated over $3.7 million in revenue for the month of July. This is pretty substantial because last year, I think their entire year they did a little over $2 million. So they've been increasing their revenue quite dramatically as of late. And there was a quote from Jason Allen, who's the Chief Executive Officer of Virtutone, and he stated, and I quote, "We are excited to share the results of this record month for Virtutone. We've been growing at a substantial rate and generated more revenue in July than we did in all of last year." So there, as he said, I go on with the quote, "This revenue comes from ongoing relationships that we have developed with other telecommunication carriers. In addition, we're continually adding new carriers to our customer base and expect our revenue growth to continue." End quote. So as you can see there, this company has improved their earnings quite dramatically. And in fact, there was a really good interview yesterday at AGORACOM between George Chiolis, who's the founder of AGORACOM, and Jason Allen, the Chief Executive Officer of Virtutone. If you're interested in that, watching that, just go over to our blog. That's on agoracom.com, or you can go directly to it at blog.agoracom.com. So that's blog.agoracom.com. The stock symbol for Virtutone is VFX. The next company I wanted to talk about today is Semafo. Semafo announced, the headline from their announcement was delineation drilling at the Sioux extends mineralization. Results include 10.68 grams per ton gold over 12 meters and 23 grams per ton gold over 3.5 meters. Semafo has completed diamond and reverse circulation delineation drilling at their Sioux sector at 25 by 25 meter spacing to approximately 150 meters. Drilling was also carried out at 50 by 50 meter spacing on some of the known extensions of the deposit. In addition, drilling within the deeper south area has returned consistent mineralization. Given the excellent results from the Sioux South extension and the availability of rigs on site, the corporation decided, with the drilling originally scheduled for the fourth quarter of 2013, this program, which consisted of 3,847 meters of drilling, has been completed, and the results are to be incorporated in their next reserve and resource estimates scheduled for September 2013. So they've drilled a lot of holes on this. They mentioned that they've had about 129 core holes, or 25,000 meters, and 237 reverse circulation holes, or 30,674 meters. They have a table in the press release that gives you the actual drill hole results. I looked over those results, and they had a bunch of holes there with drill holes with solid intersections of high-grade gold. They're currently performing their geological modeling and reserve resource estimation along with a proposed mine plan for the Sioux deposit, or SIOU. I'm not sure. It's SIOU. They're progressing towards production faster than initially planned, with stripping activities now scheduled for the third quarter of 2014 instead of the fourth quarter of 2014, so they're about a quarter ahead. This is a project in West Africa, and that's the project that the company is most focused on. The project is in Burkina Faso, West Africa. The stock symbol on that company is SMF in Toronto. The final company I wanted to talk about is Pacific Potash Corp. They are an AGORACOM sponsor as well. They announced Pacific Potash Corporation focuses on Brazil Advantage. Pacific Potash would like to, they wanted to reiterate their main focus on the Amazonas Basin Potash project, with drilling planned to commence in September, so right around the corner here they'll start drilling. But what they wanted to clarify, there was some news out yesterday regarding Uralkali's exit from the Belarusian potash company, and expressed intention to increase production by 2.5 million tons next year, that it had an inordinate negative effect on potash stocks. The company is in agreement with a statement by K&S, and it's got a long last name that I'm not very good at pronouncing. You'll have to find it on the company's news release. That the pricing of potash fertilizers being spread by the media are unjustified, and they do not reflect the current supply and demand situation in the potash market. Then Pacific Potash went into some details about what their advantage is in Brazil. They feel that they have a uniquely positioned project in the Brazilian market that has substantial logistical cost advantages. They're only a few hundred kilometers from their end user of the product. Brazil is the third largest consumer of potash globally. Is also the world's fastest growing potash market, as it has a fast growing and a large industry and agribusiness. The country has an estimated 30% of the world's remaining arable farmland and is poised for long-term growth within the sector. The Brazilian National Fertilizer Association has released data showing that potash consumption increased by 9.3% year over year to a record 8.1 million tons of potassium chloride, or KCI, 93% of which was imported. The country currently has only one operating potash mine, which produces approximately 700,000 tons of KCI, or potassium chloride, which is only 7% of Brazil's demand. Presently, the cost of shipping, freight, importation duties, taxes can cost well over $100 per ton, in addition to the potash spot price. So a project located in the Amazonas potash basin, supplying to the NPK blending plants locally in Brazil, would incur shipping and logistical costs in the neighborhood of $30 to $50 per ton. So that is definitely a significant advantage. Pacific Potash's stock symbol is PP on the Venture Exchange. Now, after I read this, because I was quite interested in this Brazil advantage, but I wanted to get an idea of the overall story that they were referring to, because I follow other potash companies. So I did a Google search, and there was an article out yesterday by Bloomberg. The headline is, Potash's $20 billion market transformed by Uralkali. And I'm quoting some stuff from this article that you can find on Bloomberg with that title. For the first time in 8 years, the $20 billion market for the crop nutrient potash is set to become freely trading. A surprise announcement yesterday by Uralkali, the biggest supplier of the commodity, said it decided to end production restrictions that underpin global prices and suspend a venture with a Belarusian miner that controlled exports from the former Soviet Union. So, a lot of times when you hear news like that, the market can definitely go into a tizzy, and it looks like the market for potash had done that yesterday. For example, shares of Uralkali, Pacific or Potash Corp of Saskatchewan, Mosaic, and Israel Chemicals tumbled as much as 24% as investors anticipated a flood of supply overwhelming demand. Now, if you know anything about commodity production, the idea that these producers can just slam all kinds of potash into the market is not. That doesn't do them any good. They're going to lose. They're going to lose potential profit there. So I think it's only time before these things sort of work their way out of the market. They mentioned that in the article that Uralkali is abandoning one of two. The venture is abandoning one of two that until now controlled most of the world's supply by negotiating fixed-term supply contracts on behalf of their members. That means potash companies don't compete with each other individually in export markets, helping them to match production with demand. I doubt that this is going to mean that they won't be doing fixed-term supply contracts in the future. You still have to do a deal with the end user of the product. The change may drive down the price as much as 33%. Now, I find that to be a pretty incredible kind of number. If you knock the price down that much, it's going to make several projects very close to being not profitable, and I don't think that's going to happen. There was further stuff that I read in that article that I found interesting. Uralkali said yesterday in a statement it broke with BPC after the Belarus government canceled the group's exclusive right to export the nation's potash. There's a quote from Baumgartner, who said yesterday in an email response to this questions, and I quote, Uralkali is most favorably positioned, being the lowest cost producer. High capacity utilization result in economies of scale, enable us to increase our share in all key markets, end quote. It'll also drive the price down, so you got to be careful of that. Uralkali stock was cut to sell by analysts at HSBC, Credit Suisse, Barclays, and Citigroup. So obviously, the quotes from the chief executive officer don't sort of coincide with these coming out with some pretty bullish comments, and it doesn't really look like the analysts feel quite as excited about that potential situation. There's a quote from, it goes on that Russia is likely to put pressure on Belarus President Alexander Lukashenko to repair the situation, said Raymond Goldie, an analyst at Salmon Partners in Toronto. I've followed Ray Goldie for many years. He's a very sharp guy. He does his homework. He understands supply and demand, and so I put some good weight on that. Like the hysteria in these kind of situations, they're talking about moving the price from $400 a ton down to $270 a ton. Now you look at a net user like Brazil. If you you start moving that kind of price around, that's going to affect seriously affect some producers of this, and then you've got the economies of moving this material around. Uralkali has a cost of $62 a ton, whereas most North American miners are at around $240 a ton. So as you can see there, those marginal mines are going to have a hard time making any money if the price drops that significantly. Now, I tend to think that these kind of press release or these kind of speculative situations in the market tend to work themselves out. You know, you can't, miners don't want to lose money. They're not going to slam the market with a lot of supply. Even the lowest cost producer still wants to make a lot of money. Your analysts don't think that this is going to be that beneficial for Uralkali. That's why they're slamming the stock on them as well. So it's an interesting situation. I definitely think that Pacific Potash has some advantages there in Brazil being close to the market. I follow several other potash companies, so I'm going to be doing some more homework. It might be one of those situations where the market overreacts like it can and create some opportunities. On that note, that's the end of the show for today. Before making any investment decisions, it's important for you to speak with your financial advisors and do your homework. This Monday is going to be a holiday, so our next show will be on Tuesday. I'm Alan Barry Labucan, Chief Market Commentator for AGORACOM. Have a great day, and we'll talk to you soon.